Rob Price here from Some Money Capital. I wanted to take a moment to speak through what's going on with Luna UST and all the ramifications for crypto, the industry, and what it means. And I think the too long didn't read is that conservatism has paid dividends in these challenging times. But this creative destruction that we're seeing as a result of this Luna debacle and the going under of that project, this will see the industry emerge stronger and heightens my long-term conviction in the industry. And I think that outlook remains strong no matter what the regulatory consequences are. And the key conclusions really from this video is I'm going to speak through briefly kind of my views on stablecoins more broadly, because I think we need to distinguish between different types of stablecoins, and speak through briefly the crypto contagion, the regulation, the implications there, and then of course, as I said, the creative destruction, which I think is one of the key take-homes for me of this going under of UST and Luna. And of course, the ability for Bitcoin to be stronger throughout that volatility. Maybe not from a price perspective, but certainly from a network perspective. And then a last reflection from my side about kind of these some of these broader risks in the crypto markets. So. And throughout this, if you read the physical article, I'm kind of using this analogy of thinking of Luna and UST as this forest fire. Well, really, the crypto market weakness is this forest fire kind of cleaning the unnecessary and the weaker projects from the industry, which makes the industry and the market stronger over time. I recently visited Yosemite, and I was thinking about the analogy to these 1,000-year-old sequoia trees that survive these incredible fires. And you can see that on the trees. So that's just a nice kind of analogy to keep in mind as we think through this volatility we're experiencing, the creative destruction and the resilience that is created in the strong assets like Bitcoin. So touching briefly on stablecoins in general, I think it's important to note, I've been quite positive about stablecoins in the past, and I remain positive on stablecoins. They are a bearer asset, which is a great distinguishing feature. You're able to get reasonably fast settlement in those assets. This is an interesting innovation, and I'll link through in the article and in the links in the video here to the articles that I've written on that front. I'm still excited about stablecoins, and in the past I didn't write much about algorithmic stablecoins, and that's obviously a different type of stablecoin to the ones that I'm constructive on. I'm constructive on the more centralized, the fully collateralized assets. Algorithmic stablecoins, well, certainly UST was an uncollateralized stablecoin, which is obviously quite a difference to the ones that I've just been speaking about. Briefly going into the history of UST and Luna, UST was a stablecoin created within the Luna ecosystem, and these two assets were integrally tied to each other. And what they did is they offered unsustainably high yields on UST in order to attract market share. But yeah, rather than UST being collateralized by underlying dollars, it was actually collateralized by the ecosystem itself, by Luna, and it created this reflexive loop where you saw as people demanded UST, that would actually boost the price of Luna. That created credibility for the ecosystem, further encouraging people to buy UST. And you had this reflexive system going up, and of course the opposite took place on the other side. and one way to almost judge the credibility of the network was to look at the ratio between the market cap of Luna and UST. And when that was above 100%, it looked like the ecosystem was pretty sustainable. But once that started to drop, and it started to drop more aggressively into Q2 2022, obviously placed a lot of pressure, and the reflexive loop that I spoke about on the one side took place on the other side, where as soon as the peg was broken, that encouraged people to conduct an arbitrage where they were converting for Luna and selling that Luna, and also people were redeeming their UST, and we saw this project unravel in incredibly sharp and fast fashion in the matter of a week. One contextualizing point to make, I think we should note that, of course, this does take place in the context of tighter market liquidity. When times are good in 2021, when interest rates globally are falling and liquidity is being pumped into financial markets, lots of investments seem like a good idea. And of course, the opposite is the case when the tide is pulled out. And that's exactly what we're seeing here, and it exposed these pressures in Luna and UST. And to see an unraveling of effectively $50 billion worth of market cap combined between UST and Luna in the matter of a week, shows, this is the biggest failure in crypto history. It's absolutely gobsmacking, and was incredible to watch it in real time. It clearly sends shockwaves through the industry. So what are the implications here? So I've got four main ones, and there are a few kind of sub points. First of all is obviously the contagion to the rest of the crypto markets. Not only did Luna hold other assets as they were trying to kind of semi-collateralize their stablecoin. They were holding Ethereum, they were holding Bitcoin, they were holding AVAX, and they sold those assets and created this contagion elsewhere. But also you had a lot of funds, retail participants too, who were holding UST and Luna, who were obviously selling down on that. They were incurring huge losses, they were having to de-risk elsewhere. And that caused this broader fear also in markets. For a brief period of time, we even saw Tether depeg, which is another big stable coin in the crypto markets. It depegged from its dollar peg very briefly. Tether is a much bigger project than Luna, and while there's some clouds still hanging over it, a much more credible project than Luna. But that's the kind of the contagion. So that was the first implication. The second one is on the regulation front. One thing's for sure, a lot of people have been burnt by this failure of UST, a massive stablecoin. And as I've said, not just retail, but funds too. But retail in particular has been burnt here, and the optics aren't good. I can appreciate when people looking in from the outside at the crypto markets, and some people like to call crypto a Ponzi and a scam. Now listen, obviously most of crypto is not that way, and I am very vehement in my belief of that. But when people look in from the outside and see projects like this Luna, this failure, I can understand why they hold those perspectives. And one of the biggest shame here is that the misrepresentation of this investment. In the subsequent days, I've seen how some of the biggest exchanges in the world, and I don't want to specifically point fingers. There's lots of individuals we could point fingers at, and I don't want to do that. But for a massive exchange like Binance, which is one of the biggest exchanges in the world, to be advertising holding UST and earning a 20% yield as safe and happy is ridiculous. It's almost comical, but in truth, it's actually criminal. And I wouldn't be surprised if regulators are perking up their ears and thinking of doing something in the face of this unwind. And it's very possible that the regulatory consequences result in overreach, and that's kind of a risk for the industry. But yeah, from my perspective, I still think that regulation on stablecoins will be a net positive, kind of no matter what the outcome. Because my opinion is that the U.S. government is not going to turn away from stablecoins altogether. They could. That obviously is possible. But my view is that the technology is too useful to the U.S. government to have these private stablecoin issuers, which the U.S. government could very easily regulate, particularly the ones in the U.S., and use these as a tool for monetary and fiscal policy. And I think that's where they're going to go. So yeah, my opinion here is that that's a risk. It's something we've got to monitor, and the chance of regulation now is increased in probability. But nevertheless, I still think that it's unlikely to be a hugely negative thing over the coming months and quarters, but something to watch out for. Third, there's this kind of broader implication for me of just a creative destruction. I think that while we're obviously gripped in the negative implications of the contagion and the losses incurred by many investors, this will be a long-term positive for the industry. There's creative destruction is a great thing about financial markets, but it is a problem in traditional financial markets that you don't see the full might of the markets playing out because we see so much central bank and fiscal intervention. And in crypto markets, we obviously don't have that. No one is coming to save crypto markets and to bail them out. And that obviously induces volatility, but it's a good thing. The bad projects fail and the good projects stick around. And Bitcoin is displayed an incredible amount of strength, I would say, during the last month. We actually saw about 80,000 Bitcoin indiscriminately absorbed into the market as Luna sold down on its Bitcoin holdings. And yet, Bitcoin weathered that pretty well. Obviously it had a negative impact on price, but I think this suggests to me that we are close to the bottom of this cycle than the start. I'm not going to go into kind of market prognostications in this video, but nevertheless, that's one implication for me. So that's an exciting thing. It's obviously negative in the short term, but I see crypto rising from this Lehman's moment positively without government intervention and getting stronger over the long term. And then a bit more of a personal one is that I think that conservatism and a cautious approach has paid. I've long been skeptical of many altcoin projects because I worry that many of them aren't as decentralized as they should be. That there's a lot of protocol risk, and that a lot of these are creating complicated features on top of live financial assets, and there are risks there. Now listen, I know at times I get kind of overly conservative and overly cautious, and I'm cognizant of that, but here it is paid, and so it's good to kind of to know that, to reiterate, and to see the value add of the process and the thesis playing out in markets. Yeah, and then the second one related to this is looking at the other side of that. I'm also aware that being conservative, it means that I haven't been as engaged in something like Luna as I could have been. I've written about it in recent months. I did highlight some concerns that I had. I remember on the 2nd of April, I said that it sounds great in theory, but there are some potential issues. Many stable coins have crashed in the past. Essentially, the system is reliant on Luna maintaining its value and being able to keep the peg. And if Luna loses value for an extended period of time, investors will question the viability of the whole project. And a self-fulfilling prophecy emerges where UST will very likely trade at a discount, and arbitrages will consistently deplete Luna reserves until the whole project fails. And so that's basically exactly what happened. But nevertheless, because I wasn't as engaged in this area of the market, I wasn't maybe as bold in my predictions on this area of the market as I could have been. And I think that presents an opportunity going forward, both from a return perspective for me, but and for my clients, but also in terms of investor protection. And so for me, it's just, it's good to reflect on that. And I plan to redouble my efforts to understand those areas of the market, to provide that value to clients, but also to the broader community. It really is a tragedy to witness the way in which many friends and associates have had capital rugged from them, pulled out from under their feet. And I believe that I could do more to address that. So I'm looking forward to evolving on that front over the coming quarters and years. I think the key conclusion here is that crypto is the bastion of free markets without centralized intervention. And the full might of the market sharks are actually felt in crypto. This is, it's challenging over the short term, and the contagion is something we have to deal with. The risk of regulation is something we have to deal with. The negative returns is something we have to deal with. But just, like forest fires, clear away the brush and create the nutrients for the forest to grow stronger going forward. So I'm excited. I'm excited that the thesis is resulting in good understanding and value add within these markets, and excited to add more value for clients, but also the broader community going forward. If you have any questions, as always, please feel free to shoot them through in the comments or via email or text. Always great to connect with everybody out there. Sending you well wishes and chat to you soon. Thank you.